Another wild day in the market with a big trading range on the SPY. However, you wouldn't know it by just looking at the raw numbers. SPY was only down 0.18% on the day, closing at 504.38. However, we did get as low as the 483 to 484 zone earlier in the day before having a significant rally. I thought this bounce today was actually very significant, very different from the last couple of trading sessions where we closed on the absolute lows. Today we closed somewhat near the highs, above 500 and near the largest gamma exposure concentration. We've been discussing our lower dealer cluster zone over the last couple of days. Of course, it's been moving lower over the last week. However, the bulk of the gamma exposure concentration has been between this 500 and 520 zone over the last couple of sessions. And so with the largest gamma exposure at the 505 strike and a ton of volume coming in between 495 and 510, I think this has a lot of markings as a potential, at least temporary bottom here in the market. We mentioned this in last night's video as well. We are way below the zero gamma exposure level, which is currently sitting just below the 570 level. A lot of the technicals like the 50-day EMA still way up here at 571.56 on the daily candlestick chart. All that to say, we are in extreme territory, and this is a very headline driven market. So there's a lot of emotions going on and a lot of reactionary trading. Best to stick with the data and keep a level head, of course.
Thanks, Anthony. I pulled up SPX because sometimes we see SPY and SPX actually disagree with each other in terms of the GEX picture. And while both are deeply in negative territory right now, one thing that caught my eye with SPX is that SPX still has considerable large negative GEX clusters all the way down to 4750. We want to keep an eye on the GEX at lower prices on SPX. I also wanted to point out briefly historically, back in 2023, we noted that at this March bottom, the SPY GEX was deeply negative and SPX actually turned positive. And sure enough, that ended up being the beginning of this huge rally. So I tend to give a little bit more weight toward what SPX is telling us, but it's a cautionary signal that we're seeing slightly different GEX pictures on both.
Thanks, Sean. Yeah, we always like to compare the different GEX data across the indices, the SPY, the Qs, SPX, across all the major ETFs and indices that we track to really get a global picture of what the total market is actually doing. On the Qs here, we see we actually had an up day closing at 423.69. We mentioned in yesterday's video, large GEX between the 390 and the 400 strike. We actually got a dip down, not quite to that level, but down to 403 this morning at the lows. And the largest concentration is now sitting at the 410 level. And so the gamma exposure picture on the Qs is actually looking a lot more favorable than it was yesterday. More neutral, not super bullish. However, I would say this is a good sign in terms of a potential temporary low, as well as with the volume that we saw between the 400 and 450 strike. Again, these are extremely wide ranges that we're seeing. We don't usually see daily ranges this large with the volume in gamma exposure data that wide. In terms of option contracts, we saw multiple strikes exceeding 200,000 contracts per strike. So significant volume here in the options market and a significant shift in the gamma exposure picture to a more neutral stance where the current price is sitting here around the 423, 424 level.
Thanks, Anthony. Let's take a quick look at the VIX. The VIX spike so far is definitely one for the history books. We reached 85 somewhere back in March of 2020, and actually we even reached a little bit over 60 as recently as August of last year. So it's not unprecedented to see VIX prices up here, but they don't typically last very long. And for us, once we got above the whole moving average, which is this yellow line, that was a signal using my process to at least not be short volatility. That's a long signal, and we're still above it, of course. We do notice that there's a very large GEX cluster here at 50. We spiked above that, which is the upper dealer cluster zone, closed below it, and it's a big red candle. This is what we want to see for bulls to have a shot at a reversal with the VIX dropping and the market rising. But We just need to watch what happens with this GEX cluster at 50, and of course the things that we pointed out with the indices as well.
Thanks, Sean. With all the craziness today, we actually had a number of names closing in positive territory. Palantir was one of those names, closing up 5.17% at 77.84. I think Palantir has actually held up relatively well over the last 3 trading sessions. You can see here, not as big of a dip as the rest of the market, although from the highs, it has sold off quite steeply. We do still have large negative gamma exposure concentrated at the 60 strike, and we have large volume there today as well, nearly 50,000 contracts, but we had a lot of volume coming in here at the 70 and higher strike, and so that's something to note, especially on this bounce today. One thing I'm going to be watching for is continued volume at higher strikes into tomorrow's session. So during extreme events like we're seeing unfold over the past couple of trading sessions, we do want to have our eyes on both the gamma exposure data and the volume data, and so I think those two combined can give us a better picture. Yes, we do have large negative GEX sitting at 60, but we do have volume increasing at higher strikes and not a lot coming in here below the 60 levels. So while I do see the possibility for a dip down to the 60 strike, I think from a risk reward perspective, the odds for a bounce potential are increasing, and so we want to be aware of that. And Palantir, interestingly enough, is one of the names that we watch to judge risk on sentiment in the market, and so interesting that that had a big positive move today.
Anthony, we've talked about Lockheed Martin a lot, and I do think Lockheed looks interesting here, but I wanted to go over another defense contractor as we continue the theme of both addressing the market, but also looking for tickers that help us to diversify in a way that doesn't give us exposure necessarily to the exact same movement that we might see with the NASDAQ or the S&P. And so Raytheon is what I wanted us to look at. RTX, it was doing quite well until 2 days ago, and basically it just fell apart in a matter of 2 days. The upper Keltner channel is sharply pointing higher, which is a divergent positive signal from the obvious lower Keltner channel, which is dropping as prices dropped, as we see here. But we have volume all the way up at 145, the upper dealer cluster zones at 135. Big GEX there as well. And even this 120 is still, fairly significant cluster. So RTX is a name to keep an eye on with the current setup the way we see it.
And if you want access to our Geek dashboard, which includes gamma exposure analysis, algorithmic trading strategies, as well as option flow analytics, head on over to geeksoffinance.com. You can sign up and become a member. Members also get access to all the premium channels in our community Discord. You can follow along with all the moves we're making in our own portfolio, as well as share and get new trade ideas and strategies from all the great traders in our community. You don't want to miss that. Link in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.